You are listening to Charting Wealth's comprehensive review and forecast for the week beginning Monday the 15th of May, 2017. We're going to go through all four of our charts and then tell you about a special treat we have to subscribers to chartingwealth.com. So let's jump right into these markets. We see that stocks are mixed. The S&P 500 is down for the day. The Qs, that is the Nasdaq 100, is up for the day. Gold is up. Bonds are up, and we do not have a crossover in gold. That is on the weekly chart. No weekly vertical crossover. Got close, but no cigar. Let's jump right into the S&P 500, down 0.17% for the day. We see that we have three nice up candles, but we still have a down weekly vertical crossover. It has not been strong enough to turn things around. So as far as our trend following techniques go, we are not in it. In fact, as we zoom in a little bit, we can in fact see that the PPO has barely moved. It's actually moved going down again, just barely moving down. The derivative oscillators continuing to lose energy. So again, that's on the weekly chart. So it's not just going parallel now, but a little bit down. So we shall continue to watch. Are things stalling out as far as the charts go? If we look at, again, our weekly, we're holding somewhere right around $240 seems to be a ceiling. So we will continue to watch that over the course of this next week. Has the S&P 500 topped out? Don't know. But again, derivative oscillators losing energy, but our big indicator, the price percent oscillator, is moving sideways and tending toward down on that weekly chart. Remember, all things being equal, market tends to move in the direction of the largest chart. That's our weekly chart. What do we see now by our two-day candles? We see that the two-day PPO has moved sideways. Folks, if this crosses over during the next week going down on the two-day chart, we will call it a two-day crossover, vertical crossover. We will move our line from when it crossed over going up on the 27th of April to going down. So it hasn't occurred yet, but we're seeing energy being lost on the up movement, so moving toward the down. And we also see, in fact, that the PPO, the price percent oscillator, has also switched over to going just a little bit down. Now that could change immediately Monday morning. We look at our candles. We have a doji and a spinning top. Lots of indecision there. When we go all the way back to the 8th and 9th, we have not gotten anywhere near where things topped out during that time period. So again, topped out somewhere, again, like we said, around 240 or so, and has slid sideways for the last, 4 days now. So again, continue to watch what is going on the S&P 500. Now let's continue to push through these charts. Going to go back to our weekly chart. Do keep an eye on the S&P for the next week. All right, the Qs up 0.22%. Those of you who jumped in as per our weekly vertical crossover for the week ending on the 28th of April, you're happy campers, are you not, my friends? We had jumped in at 10:30 in the morning, and we have seen the Qs continue to rocket up again for the day, 0.22%. As we look at our derivative oscillator, we see that it continues to move steadily up. Our PPO continues to move steadily up. The DO, the derivative oscillator, has flipped over and is also moving upward. Things are looking nice when you go in the direction of both the two-day vertical crossover and the weekly vertical crossover. Now let's dig into that. What do we see on the two-day? Okay, as we look at the two-day, we see that it has lost the super strength that it was showing there at the very beginning. It was rocketing up on that 2 days between the 27th, two market days of April and the 1st of May. And slowly over time, it has started to slide sideways as far as the PPO goes, still going up, but not up nearly as strong. and we see the derivative oscillator has lost its energy. So we topped out the highest high for the 2-day candle ending on the 9th. That was Tuesday, so that was for Monday and Tuesday. The highest was 138.63. As we go and look at the 2-day candle, well, the first day of the 2-day candle, 138.63. We're still hitting the same as far as where the market closed on Friday, hitting the same as to where it was as far as the highs go, all the way back on the 11th. So again, watch this market in case it's getting long in the tooth. You have gained nice profits jumping in on that weekly vertical crossover. Let's not lose them. We have our 2-day trend line we're still above it, but we opened below it on this last Heikin Ashi candlestick. And again, Heikin Ashis are calculated differently. They're not the open, high, close, low. They are calculated differently. And the reason we use them, we don't have gaps on Heikin Ashis. What we have that's so beautiful about the Heikin Ashis is that we have nice, clear, average paces that we can follow. So we'll continue to watch what's going on the cues over the course of the next week. We don't want to lose all the money that we've made, and we all wonder just how long in the tooth this market is. And pay attention as we move and start looking at the inversely related sectors, or we'll go to bonds and then gold. Remember, when things move from the stock market, when it's not doing good or is about not to do good, money tends to flow into things like bonds and gold. Let's check out the bonds first. They were up for the day as the S&P was down, up considerably, 0.76%. Now, as we look at our weekly chart, we can see a long wick on the bottom. Means the market was dragged down and then pushed back up by the bears. The bears pulled it down, the bulls pushed it up. So we've got continued strong down movement, but we have these long wicks on the bottom. We see the derivative oscillators losing upward momentum ever since it peaked. It peaked on the week ending the 21st of April, and we've had 3 down weeks since then. Each of those down weeks has gotten bigger. Each of those down candles has gotten bigger. And we do see that we're losing energy on the derivative oscillator, and again, we still see, we're still in a confirmed up movement on the weekly chart all the way back with that weekly vertical crossover on the 3rd of February, but we are seeing that we're starting to run more parallel on the PPO. And like we said, derivative oscillators losing its energy, so just pay attention. We don't have a trade at this point. We're still in a confirmed down move, but if for some reason we have and we're going to zoom in a little bit to things. We're going to look at the 2-day chart. If we see this 2-day chart cross back over going up, then we want to pay close attention to that. We've breached our 2-day trend line on the 2-day chart. It was a nice, strong trend line. It has now been breached by a green open box candle with a wick on top. So pay attention to this. If you see a crossover going up on the price percent oscillator, remember, we're in a confirmed up move now, so might be an opportunity to jump in over the next week. Mark that on your weekly market worksheets. The same with the advice we gave you about the S&P 500, looking for it to potentially cross over and being able, and the 2-day going in the same direction as the weekly. So pay attention to those things in particular over the course of this next week. Now, lastly, we're going to go back to our weekly chart and we're going to look at gold, up 0.28% for the day. Again, gold, just like bonds, 3 weeks of down movement. Gold, remember folks, we were thinking it might cross over. It did not do so. It did not do so. We did not have a weekly vertical crossover. Didn't occur. There will not be a text message going out to those of you who subscribe to our service. Again, don't have to worry about it this weekend, but you ought to go ahead and subscribe. The number 33222, you simply text the words charting wealth. One word, charting wealth to the number 33222. Now let's delve in a little deeper on gold, see what's going on that 2-day chart. 2-day chart is actually the first day of the 2-day candle is actually trying to breach that strong 2-day trend line. the derivative oscillator, for the first time in many days, has reduced its downward energy. And we also see that even though the PPO is still heading down substantially, not as strong as it was previously. So we'll keep an eye on that. Now, as we start seeing, don't forget, if we see a crossover, and that's a lot to change to get you a crossover going up on the 2-day, but again, we're still in a confirmed up move on that weekly chart. Now, let's dive in a little deeper and check out this 4-hour chart. Did you guys catch that? That it crossed over and started moving up? Now, again, you've got the 2-day chart moving against you, but when you look at how prescient and how well this 4-hour chart has worked, if you're doing practice trades, my friend, did you jump in around noon today? Or why don't you check out, if you did not, what this chart looks like Monday morning around 10:30. Again, we have seen this 4-hour chart work so wonderfully well for us. Doesn't mean it's going to work this time. It could fake you out. It started to fake folks out back on the 7th when it started to clear, and then, of course, it dropped back over, but then it zoomed back up again quite nicely on the 11th of April. So pay attention. You might have a good jumping in point. Ended the day with a red open box candle on that 4-hour chart at the end of the day on Friday after a big zoom up Friday morning. But pay attention. Remember, this 4-hour chart works so well for us. Now, we have the long-term trend isn't an uptrend. Medium-term trend, I guess is what we call the 2-day chart, currently in a confirmed down move. So you might practice that. Now, again, we are not a stock calling service. We do not give advice on how you are to trade. We want you to train with us. We want you to get our daily market worksheets, our weekly market worksheets, and our trade sheet and fill those out 4 times a week for your daily market worksheet, and then over the weekend before the markets open on Monday, that weekly market worksheet. Every time you do a practice trade, we want you to do it on the trader sheet as well as online at an actual brokerage firm where you can set up what are we talking about? TD Ameritrade, we're talking about Charles Schwab, we're talking about Options House, Options Express, you name it. Go set up yourself a virtual trading account and practice on a real life platform. Practice trade, keep up with it on your trade worksheet because it's going to help you chart in why you got into the trade, which direction the candles were in, why you stayed in, when you got out, why you got out, and the biggest thing is at the bottom of the page, lessons learned. How do you get the information I'm talking about? You go to our website and you subscribe. You subscribe at chartingwealth.com. How much does it cost? Nothing. We're not selling you anything. We want you to go there and subscribe and get what we do on a daily basis. Every day the market's open, we provide this information to you. In your notes, you will get, in the email you receive, you will have links that will take you to the daily market worksheet, weekly market worksheet, trader sheet, and you'll also get our How to Read a Stock Chart video. Thousands have listened to that. I was checking on those numbers yesterday, thousands. And you'll also get the layout that we use at freestockcharts.com. And it's all free, in addition to freestockcharts.com. So get started, train with us, learn with us. And then when you get good enough and you can do this day after day, in and out, you know what you're doing, you've practiced, then and only then can you use your own money to make your own decisions. Now, we have a special bonus. If you've listened to us all the way through this broadcast today, and if you are a subscriber, we're going to send out in the email that you get a link to an unlisted podcast that we have. You'll have to use that link to get it. And what we will have there for you is we will have a little bit of Q&A where the questions that you've sent us that we've answered privately to the folks who sent them to us, not going to reveal any names, but we are going to go through a few of those questions and answer them and encourage you to give us even more feedback and more questions. If you do have a question, you can always email us, cw@chartingwealth.com, or just go to Charting Wealth and under Contact Us, there's a little fill-in-the-blank form there where you can email us and we will try our best to help you. Now, again, if you want this information, if you want the the special broadcast that we're doing, you got to be subscribed to our daily podcast. And you do that by going to chartingwealth.com. My friends, pay attention to the information we talked about. Keep up with what's going on, particularly on the S&P 500, also on gold. Keep your eye on bonds. And of course, we are in that trade on the Qs, and things are rocking on that. And we don't want to lose the virtual money that we've made in it. So let's pay close attention to that Qs trade over the course of this next week. Remember, pennies turn into dollars, dollars turn into tens, hundreds, thousands. We're talking about building wealth, virtual wealth to begin with. But when you learn to do this, then you can use your own decision-making process and make real money. God bless you. Take care. All the best from chartingwealth.com. Let us hear from you.